After tumbling below $100 per barrel, oil suddenly began to gain value again. Watch our video review to find out more about the reasons for such a sharp reversal, as well as the dynamics of gold prices and the ruble exchange rate. This movement can be seen as a technical rebound. Oil's bullish run is expected to be limited due to refusal to tighten sanctions, which barely target this energy market in any way. It was these fears that acted as a major driver of a crude oil demand growth. With the easing fears, the market entered a correction. Even before the start of Russia's central operation in Ukraine, oil prices were gradually approaching $100 per barrel. Such a dynamic was attributed to growing fears of possible energy shortages. In the current situation, these risks are much higher. Against this background, oil prices are unlikely to fall below this mark. The quotes will probably swing above the level of $100 per barrel. Now let's take a look at the trading chart. In an attempt to break through the psychological level of $100, Brent crude oil futures have exhausted the potential for a further decline. As a result, the benchmark saw a price rebound. In order for the volume of long positions to continue growing, the price needs to consolidate above $103.50. Otherwise, the asset is likely to start trading sideways along the psychological level. Yesterday, the Russian currency showed solid gains. The US dollar fell below the mark of 100 rubles per dollar, but then rebounded just as quickly. Initially, the reason for the ruble's rally was an apparent reluctance of Western countries to adopt new sanctions against Russia. They realized that these restrictions will eventually cripple their own economies. In addition, Ukrainian officials said that the peace agreement could be reached soon, and this news reassured investors. At the same time, the Russian currency is still subject to high volatility and the four sharp swings. Apparently, after the price broke through the 100 mark, market participants came to a conclusion that the Russian currency was overbought. This resulted in a rebound. In fact, the situation remains challenging and uncertain, so the ruble's upside potential is extremely limited. Moreover, things will hardly change until the Russia-Ukraine conflict is resolved. Therefore, the dollar's return to the level of 120 rubles cannot be excluded. From a technical point of view, the greenback may lose value in the near future, sliding to the 100 mark. However, with the ongoing geopolitical tensions, technical analysis has taken a back seat. Thus, it's worth focusing on fundamental factors. Gold prices are also in a downtrend. The metal fell to the psychological level of $1,900 per troy ounce. At the same time, market participants seem to be ignoring its oversold status. Upon reaching it, a local rebound is likely to occur, while investors will have a chance of assessing global risks. If they subside, the yellow metal will most likely continue losing value, heading for the level of $1,800 per troy ounce. And that's all for now. We wish you profitable trading and see you soon on our channel. Subscribe to it.